Hello everybody, welcome back to Day Trader Next Door. We're here for another backyard Q&A today. I'm still a bit under the weather, not trading today, hoping to be back at it tomorrow, but today I'm going to do a quick question and answer for you. So, first question comes from Mike. Thanks for answering an earlier question on Sierra. Wondering what Sierra package I use with AMP. He's with Iron Beam, trying to weigh the different options. Now, Iron Beam is also a great broker. As far as the two that I would go with would probably be AMP or Iron Beam. As far as discount futures brokers / clearing firms, what I use is Pack 10. And with Pack 10, you get the Denali data also. Now, I have been using the Denali data, but I'm having issues with having to reload it. And so I'm looking to just go back to using CQG all the time. But it doesn't matter from Sierra Chart's point of view, because if you want to use an outside API like CQG for your data, you have to buy the higher package that also happens to come with Denali data anyway. So if you want to trade through CQG, you have to use that service pack. Now, as far as Iron Beam, I don't know, but they might offer Teton or Teton or whatever, Sierra's native order routing. In which case, I'm not sure what package you'd have to look at, but I will look into it. I expect they will probably be promoting that and make it a little bit more affordable and easier to use. I haven't used it myself, but I've talked to a couple of people that are using it, and they're quite happy with it. AMP is where I do my primary trading with, and they don't yet support it. So I'm not using it yet, but I will, I'm sure, try it someday. Tyler Burnett. When entering a position, a lot of times I take quite a bit of heat as soon as I enter. Would you recommend go in light and add more for an ideal entry, or should I just go in full size immediately and exit when I want, fully accept the risk? Now, the way I prefer to trade is in and out. In 100%, out 100%. And that's because my whole basis and my whole, plan, my whole profitability is based upon being positive net points. And if I'm going to be positive a net number of points, I want each point to be worth the same. So that's why when I do take a trade, it's going to be at the full size. When I get in, I'm going to let it go wherever it goes, and I exit it all at once. I don't scale in and scale out, because then that skews it. Because if you do scale in or you use a trailer or whatever, your losses are always on the full size, and your wins may be on part size, and it skews it too much for me, and it's just more complicated. I like to keep it simple. All right, this name is too long, but I'm going to answer it anyway. Thanks for your videos. What's the lowest cost arrangement to practice trading futures? Is there a good corollary in equity or currency to trade for trading instinct and practice? Yes. The most inexpensive and completely free way to practice trading futures is to trade the CFD feed of the futures contract or of the cash futures index. I really like TradingView. It's super easy to use, the charts are super pretty, and it's free for one chart at a time. But if you can chart the S&P CFD feed, it will be something like US 500, be what it's called, and it'll be a forex feed. I think the Oanda feed is the most accurate as far as the spread versus the futures spread. And the futures spread is only one tick, whereas forex spreads are usually more than that, but I do believe that one's the closest. I did a video a while ago that I'll link, a tutorial on TradingView that shows the instrument that works best for that. So that's the best way to do it. Completely free. Go on to TradingView, look up the US 500 symbol that I mentioned in there, and you can practice trade on that pretty much the same as the futures contract, except, of course, the value per tick is going to be different. Nick has a question. Do you think it's safer to trade the range or wait for it to break the range and get in on a pause? That was on a rangy day. And typically, Nick, on a rangy day, I will trade the range, because most of the time you'll think it's a breakout and it's a fake out. You'll hear people say that it's a breakout or a fake out. It's usually a fake out unless there's really convincing price action out of it. So as a rule, on a rangy type day, I will try and trade the range if I trade at all. If the range is too narrow, it's a good day to take right off. Donkey Face, talking about the 55-inch flat screens seem to be the best setup. That's what I found anyway. And like you say, you can't ever really decide what way you want to have it. The nice thing is, with that type of setup and with the UltraView, you can infinitely change it. I've changed mine a few times already, so you can section it off into any different size monitors you want. And to me, it's the best way to go. It's the least expensive, simplest to set up, and I'll never go back to multi-monitors. Nikolai, have you used volume profiles, and what do you think about it? Nikolai, I think volume profiles are quite interesting. I do look at them from time to time, but I don't look at them every day, and they do not form part of my trading strategy or my planning. Like I say, it's something I'll look at maybe once a month. Maybe if there's something going on, it's kind of interesting, I'll pull up a volume profile chart. You can get those on TradingView. Sierra Chart does also have them, but maybe this new package I have with the extra data does allow that, but the Sierra package I had before did not give you market profile charts, but TradingView does. And they're interesting, but again, I know people that use them in their day-to-day trading too, but just not me. Tahir has a question talking about a trade from a little while ago. Essentially said, so you were convinced it was going to at least 38.60. I don't remember the trade exactly. What he's saying is the knowledge of whether it's most likely going to do something or not is a big part of the whole picture, isn't it? And yes, it is, very much. Um, Not to say that I know that it's going to happen. And he says, for instance, I start looking at market structure and decide to enter at pullbacks, and the market turns around and goes the other way. A lot of that really, there's a couple parts to that. A lot of that is really just time in the seat and seeing it happen so many times over and over again that you kind of get a little more familiar with what's most likely going to happen. Another thing might be that there's a big level close by or something, or maybe the fact that it was coming off a 50, that you can expect a 10-point bounce off of that very commonly. Another thing, maybe that was the previous day's close or something like that. I don't really remember that specific one. But those things you pick up really from time in the seat more than anything, looking at key levels to see if that is, there's a specific level from the previous day or from the open of that day, or also looking at your technicals to see if they're steering you one way or the other too. It's kind of a whole combination of the whole picture to get that. But, keep at it long enough and that tends to happen. Talmadge has a question about tick strike. What are my tick strike settings? The stock settings, Talmadge. That's what I use on it. I haven't explored it too much. I just kind of liked it the way it came out of the box. And do you prefer the line graph on the NYSE tick internals rather than the candles, and why? I don't know. I just kind of like the line graph because it's simple and you can see where your zero is and you can see where you are in relation to where it's been, and it's just personal preference. No real reason. Hairball has a question. Will you be teaching your kids to trade when the time comes, and have they shown any interest in learning? Interesting enough, Hairball, today happens to be take your kid to work today, which is the main reason why I'm actually out here doing this, even though I still don't feel very good. My daughter's behind the camera. My son's been helping out here too, so we have two in grade 9. So I don't know. Do they have any interest in trading? Yeah. Yeah. We got at least one that's interested in trading. So the other one ran away. He'll be back though. But I'm sort of hoping that they will take some interest, though I would like to see them have another career that they can do this on the side. And maybe so it's not their main gig, but I'm hoping that they take some interest in it, yes. Nahum, sorry, how much was your leverage, he says. Well, it depends on where you're coming from with leverage, how you look at it. I don't really think of it as that with futures, but just to give you an idea, the S&P futures is 50 to 1. So for $1 movement of the futures contract is $50 movement point value. So 50 to 1 if you look at it that way. As far as how much money does it take to take a position that size, it takes about $400 or $500 in margin to take the trade during the day for a position size that's 50 times the price of the S&P. Dizzy has a question about margins and maintenance. Understand with AMP, for instance, the day trading margin for the MES is $40 and $400 for the ES. You have to flatten your position 5 minutes before the daily close, or it goes to maintenance margin. Yes, that happens at the daily halt. However, it doesn't happen in the morning. So the only time that happens is at the daily halt at the end of the day. Um, Overnight, like whole entire Globex session, is considered day margin, at least for AMP and other discount futures brokers. So you don't need maintenance margin, like CME margin, to trade in the pre-market. No, it's day trade margin except for the pause and except over the weekends. Jafar has a question. Another fellow who came from forex. He says he used to trade forex, trade slowly moving towards futures. What platform and broker do I suggest? Well, I have had good luck with AMP. I also think Iron Beam is a good um, discount futures broker, a similar type of thing. I like the idea of dealing with a discount futures broker specifically, rather than one broker that does your stocks and lets you trade futures, because they usually charge a lot more commissions and they're not as easy to use, and they usually don't integrate with the same caliber of trading platforms and software. So I could certainly recommend AMP, and I like Sierra Chart because it's never crashed on me. I keep saying that it's going to come back and bite me, but it still has never crashed on me. Very light on computer resources for the actual execution of the trades. I like TradingView for my charting. That's a little bit of an extra thing. You got to pay for it if you want to get all the screens together like I have. But for me, it's an indispensable tool. But Sierra Chart for execution for sure, and it's quite inexpensive to free depending upon what broker you work with. What's the spread? Now, when you're coming from Forex, you're used to variable spreads. The futures spreads can be variable sometimes, but it's rare. The only time you get in the ES, for instance, that you get a spread that varies is if you're in a real tight moment or when price moves really quickly in a spike, then there might be, might skip a couple price levels. But as a rule, it's only one tick. And the odd time, the spread completely disappears. Give you an idea, I always count on one tick of spread, no more. And very rarely do I ever get slipped on an entry or an exit. One tick in this case is 25 cents, but a tick is the smallest increment that the instrument moves in. So on the ES futures, the smallest tick or pip, if you're coming from Forex, the smallest movement that it makes, smallest graduation is 25 cents. So that's the spread that you get all the time, just about, and that's what I count on. Nicholas Lazarus, he says, looking at the micro, there's plenty of 140 plus contract orders and stuff, I guess on the time and sales. So why do you think they don't move to the mini? That's a good question. I don't know, Nicholas. You'd make a lot more sense trading 10 minis, because your commission would be, well, pretty close to half. But your guess is as good as mine. Maybe it's somebody that's calculating their risk, very carefully, type of thing, or some firm that only trades in micros for some reason. I really don't know. I mean, it's all the same. I understand the order. The order book is getting an awful lot thicker on the micros. Certainly in the last year, anytime I have checked it, I've really seen that. Like the volume used to be at least double on the mini, and now it's getting closer. It's half again maybe now, but it's getting much closer very quickly. So I don't know, but that's an interesting observation. Roger Harris. I don't remember if you emailed me or not, Roger, but he said, I'm trying to get your newsletter, but I'm only getting the cheat sheet option. Yeah, it will probably will be a little tick mark there that you can sign up to get the newsletter when you get the cheat sheet. If you don't have it now, Roger, email me, daytradernextdoor@gmail.com. I'll make sure you're on it. I just sent one out last week, so if you didn't get that, you're probably not getting it. Comment from White Stork. Nice to hear from you, White Stork. I hope all is going well for you. I had a question about funding companies. Now, I don't know for sure what Apex is, but I'm assuming it's trading as a prop trader. I keep saying that I haven't really formed an opinion on that because I haven't done enough research. The more that I think about it, though, I mean, I would never want to do that. And that's just me. In theory, it all sounds fine in that, well, you're trading someone else's money and you take a certain percentage of the profits, they get a certain percentage, and then your risk is technically limited, right? But all the stuff I start hearing from people is they have to pay for the education, and they have to keep paying over and over, and if they don't pass the test, they have to pay again to take it, and it seems like, and I understand that they're giving you the money to trade with, they've got get something back for that, and they got to protect their risk, right? And the fact that most traders fail, it kind of makes sense, So I'm not faulting people for doing that, offering it, or taking them up on it. But to me, it's just not something I'd ever be interested in, even if I didn't have any money. I would much rather start with, if I had just enough to trade a micro, trade in demo until you get profitable. And if you get there, you can scrape up enough to trade a micro or a couple of micros and build that up, because once you get consistent, you can build it up. If you're not taking money out of it, you can build it up pretty darn fast. I would much rather trade the way I want to trade, in the style that I want to trade, and that every dollar I make is mine, every loss I take is mine. It's just, I'd much rather do it that way. Not to say it can't work for you or for anybody else, but the more I hear about it, the less I'd be wanting to recommend it. Question from Ed Lee about the video where from I guess last week, whenever I was poking fun at the the Florida dad who walks into the Starbucks or whatever. By the way, I've got that in my email almost every day since that, from different newsletters. He just said when he saw me leave my seat and go up to get the mail, he wanted to press the break even button for me. Yeah, I kind of wish you could have, Ed. At least it made up okay, though. Did I ever look at that setup as a bull flag? Yeah, for sure. I mean, you could call it a bull flag, or you can just call it what price was doing. And what I was looking at was essentially a bull flag. I was looking at it as price going up, shooting up, and then staying there and trying to punch above it, as opposed to saying it was a bull flag. It's just a different way of looking at it, but it absolutely was one. And you can look at it that way. Rick D, what did your trading journal used to look like? I still have them, Rick. I'll see if I can find them. They're in the basement somewhere, but they're in binders. And I had a couple of different ones. One of them looks much like my cheat sheet does now, just with columns for the trades underneath it. And I would fill out the cheat sheet and write down the trades in the bottom. I eventually stopped doing that. And the other one was for forex pairs, and one side had all the different, like 12 different pairs I used to trade, and then it had a section for each one of those. Even then, I used to take notes on the overnight action of all those different pairs, and then I had my trades written out. I believe it was by pair, if I'm not mistaken, but essentially entry price, exit price, net pips for forex, and then at the bottom was a tally for the day. And I had, of course, my rules: max loss, when to quit, which was still after one good winner, etc. So very similar to the cheat sheet, just with columns on the bottom to record the trades in. And to hear very astute observation on the camera from last video. I can tell you're a camera guy too. That was a little bit tricky. That was actually an Osmo Action, the original Osmo Action, with a close focusing diopter, like on the front of it, to make it actually focus on my face instead of way back there. So I was actually pretty surprised. I had it at 100 ISO, and like everything done to possibly max out the picture quality on it. But I was quite happy with how it looked, considering what it is. But we're on full frame today, so this is a little different. But got to have a little bit of fun, right? Well, I better get going for today, guys. But anybody I didn't get to, I will get to in the next Q&A. Keep the questions and comments coming. I really appreciate them. This is a lot of fun. It gets me outside, change of pace from being stuck in my office. And it got me out today whenever I wouldn't have been doing anything else. I don't expect I'll be trading tomorrow. Hopefully I will. This video. This is Wednesday today. I'll probably publish this on Thursday or Friday. If I trade tomorrow, I'll publish this on Friday. If I don't, I'll probably publish it on Thursday, because Friday we have appointments in the city, so I won't be here. But worst case scenario, you'll get this week, and I'll be back next week, hopefully, to go full steam ahead. Grab my cheat sheet newsletter, daytradernextdoor.com. Have a fantastic day, and thanks so much for watching. As always, see you again soon. This is where you turn it off.